Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Sunday Roast. It's season 3, Sunday the 9th of January. How are you feeling, Kev?
I'm feeling okay, mate. It's actually just been the Coptic Christmas over here in Egypt. So really just been celebrating Christmas for the second time. So though my 1 kilometer walks have started, excessive amounts of food have been consumed again. So here we go.
Is that your New Year's resolution to just be a bit more active, try and get the weight off? I mean, look at this. What is it? Day 7 or 8, and I lasted that long. This is what it drives. This is what you've driven me to, Kev. 7 days of dry jam.
Do you know what? I said I wouldn't drink Coca-Cola, and it's lasted this long as well. So
exactly. So we're both we're weak. We're pretty weak-willed, really. But
both failed miserably.
Exactly.
No, actually, in the compound that we live in, there's a new club that's opening called the Nordic Club, and we're actually going to be helping out because we're setting up a play area in there for the kids. I'm really hoping, because they've got like paddle tennis, they've got, you know, that football thing that you have the net in the middle and 2 players either side.
Yeah.
And full on gym, full on MMA thing. And they've got not squash, they've got snooker, pool, the whole works. So, and I'm going to get free membership because we're running the thing. So I'm really hoping that's going to change my my health, basically.
Yeah. Get active,
more doing things. I like to participate in things. I don't like to go to the gym. I'd much rather.
Yeah, team sports the way forward. It's like you join a gym. There's no point in just tickling the weights in the gym on your own. You need to join a class mentality, that group instinct, and just go for it. Anyway, so what we're talking about, we said the first episode in season 3, we were going to do a roundup of all the 12 stocks of the 12 days of Christmas. So basically the 12 stocks we've picked for 2022 that we think are going to do pretty well, or exceedingly well, some of them. So we joined today by professional investors. We've got Mike Friedman. We remember Mike. We did the Chill podcast with him just before Christmas. We're joined by Andy Mills and also Grant Horsfall. So welcome, gents.
Thank you.
Thank you.
Thank you.
We'll start with number 1, which was Professor Conroy Gold and Natural Resources on the AIM market. Do you want to talk us through start with that one, Kev? Talk about what's been achieved by the professor in the last sort of few months.
Yeah, in the last few months, a lot's been achieved, as in that they've done the joint venture now with DEMIA, and that's been signed. Now they're still waiting for some licenses to be transferred over. So I think the market's been super duper cautious in terms of the price that it's at the minute. Still valued at sort of 12.5 million. With literally the potential for 22 million ounces of gold. Granted, that's not going to happen overnight, but a lot of progress. I think, as we said in the podcast, it's like 15 years in the making this, so it's a long time. Grant knows a bit more than I do. So Grant, over to you.
Hi guys, how are you?
Very well,
good.
Thanks.
Yeah, I was a little bit late to the party with Conroy. Obviously, it has been a long time in the making. Share price has been a little bit down, really, but I can appreciate that there's still licenses to be transferred over, and there's a little bit of cautious in the market. Sub 12 million does seem a little bit low at the moment for what they're achieving, but I think once the drilling is accelerated, as I mentioned, I know the drill's in the ground now. I think by year end, if they can get to the 1.5 million ounces, to the 2 million ounces that they're aiming for, I think we will see a fairly large rise in market cap and share price. They have achieved a huge amount, and the joint venture, I think once that's completely finalised, licenses are over, rubber stamps, I think we're going to see a lot more confidence from the investors and putting some more money in there, and that share price will rise.
Do you think there's some skepticism in the fact that it's obviously, I mean, you talk to a few people in there and it's, is that the classic Conroy, Professor Conroy, 20 years in the making, and it's almost like the mentality of some is we're not going to believe it until we see it, sort of thing. Seeing is believing. And do you think there's that element? That's why I know that there's, as you mentioned, there's the waiting for the licenses to be obviously transferred into joint venture DeMere as well. But do you think there is that skepticism involved of actually seeing this come to fruition? Is it almost too good to be true that a small, 10 million, under 10 million market cap company has actually pulled in a Fortune 500 company as a joint venture partner with a really good 52.5% or 47.5% apportionment?
I think the market wants to see it fully finalised. I think once it's fully finalised, then it's going to be a green light. More drills will be happening, more reserves proven up. Definitely by December, if they do exactly what they've set out to do, and we do get the resources up to 2 million, or somewhere around that 1.5 million, it has to re-rate. It has to move up. The
reality of the situation is, DeMere are going to come in. They've got 10 million euros to spend on this drilling campaign, and not only that, there is already 517,000 ounces proved up. This is worth way more than the market cap is at the minute. So there is definitely just a total unbelief in Conroy Gold. There's like
that's
an unbelief in the situation.
That's what I liken it to. It's like seeing, I don't know what the market's waiting for or to kind of suddenly get it. I've seen it before with other stocks that then all of a sudden you just see this massive re-rate and yeah, hopefully it'll happen. But at the moment, it's a bizarre situation they're in because it just is stagnant and there is retracement there. It hit the 42p, 43 levels, maybe even 45. And then now it's around, I think it hit 29 this week. So it's been sold down. But I just think, as you say, and this week's been a strange one, hasn't it? Because it's not a full week. There's a lot of parents that are still off because kids didn't go back until sort of Thursday time. So actually, I think until we start to see into the first 2 weeks in January, then we will start to see maybe a little bit more normality in the market. And hopefully, as you say, they actually announced that the joint venture yesterday had been actually done. That was the official RNS came out, was it this week, about the joint venture?
Yeah, and there's a few bits that need to be reconfirmed, I think, by Professor Conroy as well, just about the land and how it's going to move forward, and but all of those are being used as a real excuse, because there's no doubt it's undervalued. And I mean, we've had the discussion ourselves, 517 ounces of gold, even at $200 per ounce, with fairly high AISC, and they're getting 42.5% of it. I mean, what's that worth? I mean, I don't know. We can probably do the round figures, but what do you think?
If you 10 times your investment from this position, I don't think you'd be unsurprised. Again, once they do get that final, everything's finalised, everything's done, it's definitely got to move north. There's a lot of, in the market, there's a lot of disbelief that these big deals can be done on small cap markets, and I think everybody's very tentative sometimes. And also you've got to look at with the junior miners at the moment. There's a lot of undervalued stocks out there at the minute with a lot of potential, and you can almost see that once one stock does very well, they will move it into another stock that's got a nearby catalyst, and and if they do time it right, it can be it can be very good for them. So you can see why shares are having these massive spikes in share price, but then, gradually moving down as people move their money to other options.
Yep. It could be, as Mike said, I think, Mike, when we did the chill thing as well, just this whole liquidity rug pull that has happened. So there just isn't the liquidity in the market at the minute. It's slowly coming back. Yep. And it will be identified, I think, to possibly the potentially biggest returns. And I think Conroy could be in there. So we will see. 12 months to, some less experienced investors or more impatient investors, it's a long time to wait. And, they do chase rainbows sometimes. But I mean, I invest, I don't trade, I invest for, 10 times or 5 times what I've put in. So, I'm not
into flitting about between stocks. But you will see when you're doing that, you will see that your portfolio does go down as people exit the stocks and chase other stocks. But I think, going back to CGNR, once they do rubber stamp everything, it's definitely going to re-rate, and really looking forward to the next 12 months and what they can achieve.
I do think the second half of what I was going on about in our call has to do with the approach investors. This is more controversial, but the approach investors start to take, that would be large retail investors in this, they start to take with management in their approach to investing in these names. So on the basis that on a risk assessment basis or a risk management basis, if that liquidity never returns and the company is literally a binary outcome. So in other words, you're here, it's at 10p, it's worth £2 by any standard, but nobody cares. And then eventually in a year, as in Conroy's case, let's say it all comes through and it's worth £2. The question is, will investors start, be it small institutions or big or large retail investors, start to, or should they be starting now to campaign, to coerce, to push management to take, to appreciate that liquidity may never return again. The secondary markets are broken, let's say, in a sense. And when the ship comes in, instead of trading at 150 and it's worth £2, you want it to trade at £4 when it's worth £2. And how do you achieve that? You start now to get management to think differently and of course every company is different, but in the mining space in particular, they should be thinking now about dividends. They should be thinking now about buying shares back. Everything is changing. Capital markets have changed perhaps beyond recognition, especially in the small cap space. So where we can argue about the difference between trading and investing, et cetera, the liquidity desert that exists at the moment. There's always been a seasonality to small caps, et cetera, et cetera. It's worse now than it's ever been before for a variety of reasons I won't go into. And it could return, and I am expecting it to return, and very substantial, less, you don't have to put in as much effort to make money if I'm right, probably from, beginning of second quarter, perhaps, maybe earlier. But, what's happening now is people are selecting names on the basis of when they pay off. Is management now talking about, look, I understand we're not going to be able to flit around anymore, in the hopes of becoming the next big gold miner or getting taken out. We've got to start now to sort of, affect that sort of mentality, share buybacks, dividends, all the way to putting ourselves in play in a constructive way and forward-thinking way. There's a lot of talk like that because the gentleman was right. There are so many cheap miners right now. There are almost too many. It's improbable how many there are, and it's hard to believe. So something's not quite right. And the question is, some of the selection has to be, instead of, wow, I love lithium, I'm going to be in Iron Ridge, Atlantic. That's my current favorite. But, I want to know now, 2 years before they go into production, what management's thinking is in terms of returning value to me at that point. That's my
it's a good point
mentality.
And Ben would be a good example of that. But let's move on to number 2 anyway.
We're going to look at Extract Resources now. So we'll bring Andy in. Extract Resources is, as we know, is obviously a copper and gold play in Australia, Colin Bird. And really it's about meeting this magic figure of this 2 million tons of contained copper, and then of potentially triggering an Anglo-American buyback, which they have up to 8. They can buy back up to 80% of the asset of the Bushranger project. And also that there is also the option there of a decision to mine. So, Andy, what are your thoughts on what Colin's achieved so far this year or the previous year in 2021 and looking forward to 2022? Do you think that he can repeat what he's done in the past with the sale of some large assets?
So I got into Extract Resources just over a year ago, and it's been a hell of an exciting time in which to come in. It was shortly after the acquisition of the Bushranger asset, which you mentioned, Phil. But before I talk about that, let me talk about 2 sides for me to the extract resources business. There is the side which is the revenue generating side, which is, really at the moment out of Africa and the gold alluvials from Mozambique, and also potentially copper revenue generating projects from Zambia. So there is that side, which for me is what makes extract quite an interesting proposition. So that revenue is being used and will be used to fund future drilling programs for extract, be that on bushranger or be it on other assets that they have in Africa. And that for me holds a lot of a safety net, really. I think, Kev, in the last interview with Colin, you pointed out that really, looking at the EBITDA from the revenue producing assets, that pretty much underpins the share price. And that's my calculations as well. There's at least 4 or 5 plus pence of share price value from those assets. So that's a great safety net. So the rest of it, the exploration piece, is almost without risk or at very low risk to the shareholder. And that revenue is something that's now ramping up into Q1 and through the rest of 2022. So there's that side to the business, which I think is important for people to realise. The second part is the bushranger and the exploration bit. And, it's great that I've been given the opportunity to come on and talk about it. I've really benefited, though, from a lot of expertise on some of the bulletin boards, which Colin is also very complimentary about. And there are many people on those boards who are way more capable of talking about the opportunity than I am. But I think, perhaps a bit of a social media presence in Telegram and Twitter is, why I've been brought on, which I think is something that's lacking, and getting the word out there to the retail investor. So bushranger, you're absolutely right, Phil. It's about proving up that 2 million tonnes of contained copper. And some of the calculations around that are fairly simple to do. 2 million tonnes of contained copper, perhaps as much as $10,000 per tonne. Convert that into sterling to get a sterling figure. And at a buyout percentage, which has been bandied around between perhaps 1% at the low end, 3% at the high end, it's given you a pretty colossal impact to the MCAP, maybe 150 million. So, 3 times plus, that's looking at the 1.5%, the mid-range, the 150 million. So it is really quite an attractive proposition. Is that 2 million tonnes achievable is the next question. Well, from what has been done at Racecourse, the initial porphyry, that looks very much on the cards. Colin's looking at an open pittable resource. You're right, there's the 2 elements to it, 2 million tonnes or the decision to mine, and 400 to 600 million tonnes of resource at, perhaps 0.35. Well, there's your 2 million tonnes straight away. And the announcement on the 9th of December, I remember that date, it was my son's 18th birthday, and he's also an extract shareholder. That additional porphyry named Ascot, well, that really does change the game. Could be as big as Ascot. And then the 2 million tonnes is knocked out of the park. And this really is, quite an exciting proposition. And I found, what you guys have been talking about, the bizarre reaction of the markets recently. Well, when that announcement of the additional porphyry was made, I think the share price jumped from just under 5p, I think it was 4.8p to 6p for 48 hours, and then dipped back down before Christmas to 4.6 pence. Yeah. I did take the opportunity to accumulate there because the value just isn't realised. And that's probably why I feel quite passionate about trying to get the word out there about the value that is possible from extract and getting the word out there on Twitter and on Telegram. So I hope that answers the question.
I think that's been the story of 2021, and it's been you get this massive rush of great news that would normally have put like 80 to 100%, you know, onto the share price. Yeah. It moves it, say 30, 40%. And then by the end of the day or the end of this next session, you finish flat or down and you think, what is going on? Like, what do we have to do to move these companies? Yeah. And Mike's, you know, we've been over this and you're trying to get your head around it. Yeah, the 20%ers are taking the profit. And actually the people who've made money in the markets in 21 have been the ones who've taken the 20, they've traded the swings in these shares, taken the 20% every few sessions and pocketed it, rather than, you know, you hear it all the time, diamond hands, you know, paper hands and everything. And actually the ones who've won have been the paper hands this time, you know, in the last year. So I guess the question to you then is, we know Colin has got a past history with the Calambila project, which I think was in 2008, 2009, that was sold for something like $280 million. Yeah. Do you think there's a good chance that he will reciprocate and actually do the same thing here at the Bushranger?
I think there's a great chance that will happen. Number one is, you know, Colin's proven track record of achieving this. Number two is the team that Colin has built up around him with the acquisition of Prospect Ore and the guys who came in with that. You know, a lot of confidence, a lot of capability from those guys. I think the other things that tell me this is going to happen were two RNSs which happened last year, which were a bit under the radar. One was the announcement of share options for you know, the team at Extract with a strike price of 10 pence. And then the second one was the introduction of an incentive scheme for Extract staff based on either an asset sale or a company sale. So I think those things really indicate that this will happen. What else will make this happen? Well, hell, the world needs more copper.
I'll add one more thing, Andy, as well, that I've discovered, having got to know Colin Bird, not well, but we've obviously talked to him a fair bit in the last 6 months or so, is that he really wants to do it, to say, I did it.
Yeah, absolutely.
Okay, you know, he's not a young man, okay? And for him, success is going to be, I sold it.
Yeah.
It really is. And it comes across like so clearly. It's like, this is my goal. I'm going to sell it.
I think that's a good point, Kev. And I think that, you know, the fact is, he, as you probably saw the announcement, that he's stepping back as the chairman of Jubilee. And then one of the things that I took home from the conversation I had is, it's the day of the small miner. He wants to focus on these nano cap small mining companies, these Bazants, these AFPs, these GLRs, these Extract, and really deliver. Like we asked him a question during, it's a cliched comment, what is your ultimate Christmas present you've ever had or could have if money was no object? He just wanted to deliver value to shareholders. He said the sale of an asset and to deliver shareholder value. And that to me, the guy doesn't need money. The guy, you know, he's living a fantastic life. And as Kev said, you know, he's not getting any younger. None of us are, but he's, you know, he's in his later years. All he wants now is to make a remarkable sale so that he'll continue to be chalked down as he sold that asset for half $500 million, which would be amazing.
Yeah. And probably the other thing to say is Colin's from Yorkshire and he won't want to leave a pound on the table.
You can tell a Yorkshireman, but you can't tell him much. On that note, moving on to let's talk Chill then. Mike, you around? Anybody know Chill?
Anybody know Chill? Anybody know that we just appointed somebody rather special to sell the stuff? It's had a good start.
Well, if Mike can find the unmute button so we can actually hear him, then
Sorry.
Does anybody know Chill?
Yeah, it has
only from your you know, top 12 for Christmas. So that's all I know really. But that was very informative.
Well, I have you know, blank spots in my head on the company, but I'm trying to fill them. I think one of the great attractions is its unusual in terms of sector. I did mention this, so it's not like I've never said anything about it. But let's face it, there is a little bit for all of us trade in the UK or invest in the UK. There is a little bit of oversupply, say, of miners and oil and gas, biotech, and and COVID. This is a share which is actually in a space that not a lot of us are used to anymore. Yes, a lot of bulls on the stock use Fevertree as their guide, which is roundly mocked by the bears all the time. But I have a friend who was involved in Fevertree at the beginning, and as an investor, and the reason he got involved, and he's now a big shareholder in Chill too, is because you don't have an opportunity to invest in consumer brands in their infancy like this. Casual dining and consumer brands of this type are still favorites of mine. So that's the start. And the Fevertree comparisons, of course, are also similar in that. Not that everyone accepts this narrative, but in Fevertree's case, of course, everybody knows the legend of Fevertree. Some genius sat down, and instead of looking at where he could do something unusual, he actually took a product which was well established, high quality, and he just said, they don't have any competition. I want to make something even better. And that's what the guys at Chill did to start with in the CBD cosmetic space, which is already relatively well established, even in the UK. And you guys can talk and want to talk about Life and some of the others. But what they discovered about a year and a half ago was the smoking cessation market was really where they wanted to be. That was both an exploding opportunity and underserviced, even by established participants. And that story, despite the efforts of a lot of people on Telegram and so on, still has not gotten through the thick skull of the market. What they don't understand, the numbers are for real, exactly like Fevertree. Fevertree could look at the mixer market and genuinely say, look, if we get 5%, I don't know what the size of the market was at the time, but if we can get 5% of this by having a better product, the numbers are astronomical. Well, that's exactly what the guys at Chill realized a year and a half, 2 years ago. And the numbers, the cascading numbers are pretty breathtaking. There's still $1 trillion market in smoking. Of course, there are a lot of questions as to where smokers will gravitate. But I started talking a little bit on the previous call about this. The guys in the know, the guys who are decision makers, the guys who are trend followers or trend seekers, the guys who look into the future, they reckon, and this is why Chill has attracted the kind of expertise that it has in just the last 6 months, which constitute a whole series of announcements which have not obviously accrued into the share price. In fact, the share price is down over this period. The reason they're attracting all these people is because these guys are industry leaders who see the subsector in tobacco-free nicotine oral products, pouches in particular, as almost a limitless opportunity between $35 and $50 billion market. And they see what Chill is doing, and they've combined it with something I didn't talk a lot about, but I know Kevin is a big fan, is the guys behind this, in addition to finding this niche within smoking cessation, which has tremendous upside, and creating products to service it already. They are also building a brand. And this I do know a bit about. If you go into the more general CBD space, outside of cosmetics, nobody has a brand worth shaking, worth a damn at the moment. And the Chill brand, which is best symbolized by the Chill.com Chill.com that they purchased for what we think is about $2 million, is the cornerstone of a branding business that they're going to build, which is going to be constructed on smoking cessation, but is not going to stop there. So if this were 1990, 95, 2005, where this type of company was enormously popular, even on the revenues we generated already, honestly, we'd be 10 times where we're trading. Whether we were listed in the UK or the US, it doesn't matter. But it is a bit of a black hole that we're trading in at the moment, and it's going to be like all the small cap UK companies that we're discussing here, the deep value names. It's more of a show me market, and companies just going to have to deliver more than I would have ever expected them to. So what I'm trying to say is, just based on those two pillars, the opportunity and our position already within that opportunity, and building a brand which is absolutely unique. There is no other investment in the UK that you can buy a brand. I know it sounds maybe frivolous, but it isn't. I'm absolutely, you can't qualify the word unique. It's unique. There is nothing else out there like it. And the stock's not accrued any of the value associated with that. It started to when it got up to £1, and maybe some people know the controversy that it was met it as it made its way from 9p to 90p a pound. We won't discuss that here. And now for 20% self-inflicted wounds and 80% artificially inflicted wounds, the share price carries a bit of hair on it. As I say, 80% of it undeserved. So that brings us to this this month. And the first announcement is actually in the way I've organized it in my head, it's actually the third announcement of consequence, what economists might call information effect. These are, as I almost evangelically screamed in the previous podcast, I know, like a preacher from the pulpit.
All I remember is the old banging of the desk as Mike was vehemently banging his point across.
Yeah.
Jill will do well.
I literally counted the table and I wasn't even thinking like that.
So how often do you get a keyboard? Sorry. I mean, how often do you change your keyboard, Mike? You must be one of them hanging away.
In my day, in my salad days in the city, I broke a lot of telephones. It's true. I was known for that. But anyway, we've had 3 or 4 major impactful information events that the market has shrugged off. So the company, even when it was at a quid and 200 million pounds, what I'm about to say would still apply. But when these announcements were made, it was a 50, 40, 30 million pound company attracting A-list celebrities, A-list businessmen to the cause. Don't remember the order, but the first was a financial advisor, Viridian Partners, the #1 merchant bank in the CBD space. I yammered on a little bit about Scott Geiger, who heads the firm, who's taken it chill under his personal wing. US listed company, it would have been up 30-40% just on that. Okay, it's just crazy bullish what's happening there. Yeah, they got 11 million shares. We can discuss that another time. But so he's got a client list as long as my arm. No incentive at all to take us as a client. So you can listen to his video where he advocates for the company, and you can believe every word, because there is no financial incentive for him to do it other than wanting to own something at zero. Well, at 5p that could be worth, £5. The second was the hiring of Rhino, which is a massive marketing firm. You look at their list of clients; it includes Red Bull, which we have every hope of being on par with in terms of international brands and international.
We want to get wings as well.
We do. Well, obviously, I have them already.
Mike the Angel of Chill. There you go. Look, you have a new nickname.
I have nothing else to do. I'll take the job. What does it pay?
Nothing. You get a few free shares.
I'm in. I'm in. And then, of course, as you mentioned, Kevin, the announcement the other day, this Michael Santori, who I'm not that close to the company. I'd never heard of him before, but his CV does not read like a man who joins a 40 million pound company. So not only is he a heavyweight, exactly what we're looking for, a heavyweight in the smoking business and smoking cessation business, and marketing and sales, exactly what he's hired to do. But it's precisely the kind of guy that he's at Altria at the moment, or was. Altria has 35%, of course, famously of Juul. Juul was the brand, like Band-Aid. It's become synonymous with vaping. Kids call it juuling, I think. The Altria bought their 35%, valued the Juul at, I don't remember now, $30 billion. They've marked it down 3 or 4 times, but still private, Juul. But Suntory is actually leaving a $5 billion company. We know that because from Altria's most recent results, to join a 40 million pound company in the UK.
Yeah. So he obviously thinks it has some potential. And the good news is we tipped this at 15p, and I think at press we're about 19p now. Yeah. So effectively we're up 25%, even though it's a ridiculously small amount, as we've said.
Kevin, I think what they're calling the Mike spike started at 13 and a quarter, but
the Mike spike.
I've been on the fund management side, so changing your starting point can be very, very useful.
Okay, the Mike spike
get you on more often.
Yeah, the Mike spike
as long as it isn't followed by the Mike dump or whatever.
Yeah, the Mike. I was trying to think of something alliterative exactly along.
Yeah, it's very hard.
I think that's a jinx to call.
That would be like you'd have to be called Trump, the Trump dump or something like that.
Well, it's absolutely.
No, don't mention Trump. Don't mention Trump.
Oh no.
Anyway, moving on. Thanks, guys, for the input on show. I mean, it went on a little bit longer than I anticipated, but it's quality.
It didn't go on any longer than I anticipated. In fact, I think it was shorter than I thought.
All right, touche.
Because it was Mike.
Expecting 3 or 4 major announcements before the end of the month. Well. So.
Good.
There's definitely going to be more to come. So, Phil, let's talk about life.
I mean, the thoughts are that it's performed in terms of business-wise in what they've delivered and achieved in the last 12 months has been remarkable. From a company that literally just had oils on the shelves of Holland and Barrett and Boots in the high street, that was a high street brand. It then cemented itself by obviously realizing an activation agreement or an agreement with UFC, which was earlier in the year, I think sort of May, June time. And then obviously went on to cement a brand ambassador in the form of former world heavyweight champion Anthony Joshua as a brand ambassador or as an investor in the company. So yeah, that from that aspect, in terms of the awareness, the brand awareness they've achieved has been frankly remarkable. In terms of share price performance, it's been regrettable is the word I would use. Meaning, it grew in February of this year. It moved from the sort of 2.5, 3p mark right up to 14.5 pence. And then there's obviously been dilution in the company, the number of shares. You can't make a comparison back then as now, because there's been almost probably another 700 million or 600 million shares issued. So it's diluted down by 300%. I think if you look at the values back, it was about 185 million. So yeah, there has been dilution. That's what a growth company is, that they need to do that to raise funds. And there's been obviously a few fundraisers along the way. But in terms of the company itself, I still have complete faith in Tony Calamita. Obviously, he was on, there's not been a massive amount of engagement in terms of getting podcasts out there or interviews with the CEO. But finally, we managed to get Tony on the midweek, which was great. And the passion he has, and I'm sure you'd agree, he's very passionate about the brand that he discovered in his bedroom with Thomas Rowland. And I still believe that he can continue to build the brand. And I think the key to the brand now is to get the North American rollout in place with using the UFC activation deal there to maybe white label the brand that they've got, the product they've got, and actually get a kind of UFC branded oil there to all of these fans. Because undoubtedly there's a massive following on the UFC. It's probably one of the biggest subscriber fan bases in the world. So yeah, why not utilize that and kind of exploit that? For me, if they can capture that market and Asia, they've nailed it.
I saw with Tony the huge amount of passion in what he's doing. And I also think Love Hemp has started to become a good brand. You know, it started to brand itself in this oil market and different other CBD products that are going to be different. And that is vastly different from what Chill are trying to do, and even in a different market. Because, I mean, basically where Love Hemp has to change is it has to expand to the rest of the world and not just be a UK-based situation. And obviously that costs money. And this is one of the reasons why I think it's where it is right now. But I still think Uplist will be a different ballgame. I think Tony said it in his own words, currently valued at £10 million, and every other CDB play in the UK. I would take Chill out of that equation because ultimately it's not a CBD play in the same way as the other ones are. They're all 40, 50 million pounds. So, you know, we had 1p to 3 or 4p, I think, as our target. And effectively, they just have to go to that point, and that should happen. As you said, white label in UFC, white label in Anthony Joshua, and athletes CBD. I can see from talking to him, to Tony, that the marketing is very directed. You know, it's not just scattergun. They know what they're trying to aim for. They know the market segments that they want. So, yeah, I would have some confidence. As you know, I'm more of a chill man than a life man, and you're more of a life man than a chill man. So we will see. But I expect from these lows that they should both do well. And that brings us on also to Seed, because we had Seed on Seed Innovations with Ed McDermott, who I respect greatly. I think he really knows what he's talking about. And this is more in the cannabis space and the medical cannabis space that they're aiming at. They've purchased some brilliant parts of companies. They did the EMAC deal, which everyone complained about, but ultimately, in hindsight, they got cash, and it's 50%. It's worth 50% more than if they hadn't have had the cash, if they'd had the Leaf shares. But there's big catalysts going to happen with Seed. You've got, hopefully, that medical cannabis is going to take off with different plays that they've got. They've got Yuma, which is another sort of CBD type play, similar to Love Hemp and the other ones that we could name. They don't own a big part of that, but I think it's about 5%. But more importantly, their biggest holding is Leap Gaming. And Leap Gaming is going to IPO in 2022. And there is going to be an event, you know, a financial event, which should mean that Seed's market cap is a joke at the minute. And from when we first interviewed Ed, it was 5.5p Seed. It's gone to, I think, about 8p now, if the last time I looked. Yeah, so it's already moved considerably.
It was massively oversold. And that was one of the reasons why we liked it anyway. But one of the reasons why we put it on there, because we thought it was a low hanging fruit. Pick that one. It's cheap at 5. When we actually did the interview, I think it was around just low 5s, like 5.1, 5.2s. It was massively oversold. And that's when you listen back to that interview, you'll hear Ed commenting on the, if it wasn't deadly serious, it would be, you know, laughable sort of thing. And actually, since that went out, people were probably thinking, what do you mean? It's at, like, you know, it's well above the average it's been for the in the last 52 week high, not high, but you know what I mean? Like 8.5 is probably as good as it's been in the last year, really.
But still 3 pence.
Yeah, I mean 11.5.
The NAV.
Yeah, it's like 11.5 NAV, I think.
Yeah, I think it's just below 11 pence. But even so, the NAV should be the realistic price of that share now. So there's still plenty of upside from 8 to 11p. And then on that, you've then got the Leap Gaming issue to come to an event, if you like, a financial event. And I think that could spring it another, 100%. But again, that could be a bit too optimistic. But I think our target is
target's 18p. Yeah. So I mean, it's
so. From 5.5 to 18p, you'd be very happy, I'm sure. Okay, Phil. So we're going to go on to Ben, are we now?
Yeah, we're going to move on to Ben now. So Ben's Creek is a stock that hit the market in October time. It was an AIM admission and listed or IPO'd at 10 pence. It hit the ground literally running, or sprinting probably would probably be more apt. And this is a met coal play in West Virginia. And don't start singing, Kev, before West Virginia, those two,
Mountain Mama, take me home.
Yeah, stop.
Country road.
Please stop.
Okay. Yeah, please stop now. Yeah. So even to Mike, that's just sacrilege and yeah. Anyway, so met coal producer, and I will say producer because they have literally got there's coal on the ground. They have a high wall miner on site at Ben's Creek, and they are literally offtake agreements in place with an offtake Integrity Coal, an offtake partner, and they've got a mega high wall mining company behind them as well, providing the services on site. Adam Wilson's the CEO. We've talked to him a lot on this show, and he's very dynamic. He's driven. He's a sort of under promise and over deliver kind of CEO, which is we love those type. And I'll go to Grant initially. I mean, what do you think? I mean, what first got you into the company and sort of really piqued your interest in Ben?
I missed the IPO at the start, but I found it very quickly. Believe it or not, it was the podcast from you guys. And when I listened to it, Adam Wilson, he's standing fantastic. He knows what he's doing. I mean, when I first come across it, I think it was at 13 or 14p. And I mean, it really has travelled quickly. It moved up to nearly 40p with, just over about a month and a half, which I mean is incredible. The offtake agreement landed a few days after I invested. So that was very nice. It was a nice RNS to wake up to. And then, it went on from there. They've moved very quickly to production. And what company can you say has IPO'd and within 2-3 months they're already producing and have the offtake in place? And, I think that the main thing that Ben has got is the infrastructure was already in place. It just needed maintenance, getting it up and running, which they're doing now. I think they're going to have a very, very strong Q1 of this year. They've got the wash plant, which is, getting up to scratch, which will be fully functional. The railroad maintenance is going to be nearly completed. I know he's put another team onto that now, so that's good. First loadout and train leaving probably mid-Feb, and then we'll start getting our profit or second stage payments, however you would like to word it. And then I think early Q2, I suspect that we'll be getting the second high wall miner going. And I think Adam he's going to have a war chest by the end of this year. We've got an acquisition that's just happened. And I think he's going to tie up the surrounding areas. And whether new acquisitions have got a wash plant, have got a rail load out, I think he's just going to make sure that he gets all of that in place.
Yeah.
Met coal is definitely, I think we've averaged well over $300 per ton at the moment. And if you look, it's definitely the rise of met coal in the last quarter.
I think that's a good point. I think it's like timing is everything, isn't it? It's like the previous company that literally couldn't make a go of it because met coal was literally on its knees at a sort of sub $100. And then all of a sudden, there's an increase in met coal. Biden announces the $1 trillion infrastructure package. Obviously, the demand for steel, because obviously maybe people don't invest. Listeners maybe not understand that met coal is used in the process in the production of steel when it's mixed with iron ore in the blast furnace, and you produce steel basically, which is obviously used for infrastructure, building of roads. And look at the demand now in China for steel has gone through the roof. Hence why prices of met coal have gone through. And this isn't to be confused with thermal coal, which is the dirty coal, which a lot of investors now we need to avoid thermal coal because of the CO2 emissions when it's burnt. But met coal, good. You've got the high vol A and the high vol B. They've already targeting the high vol B. The offtake agreement with Integrity Coal is for that. And they reckon by February, March time that they will start to see the EBITDA coming into the company and actual revenues going forward. Now, you're right. There was a recent lease agreement announced, I think it was about 3 weeks ago now, just before Christmas, where they, for a nominal fee, they've bought a landlocked asset, which is right next door to Ben's Creek, and they could potentially start to add and build up those resources. And that's what these miners do, isn't it? They add new resources in there. They build up that resource sector and build up the resources, and then that adds to their market cap effectively. So yeah, I think that, and it's a timing thing, because Investec, who actually went in there, right, and effectively repoed the previous plant, have got a lifetime royalty on this, right?
$2 a ton. That is what Investec are getting.
Sorry, on the original.
On the original deal.
Yeah, sorry.
And the interesting thing about all the new deals, if there are going to be more new deals, is they really are royalty-based deals. So there isn't a lot of cash involved unless there's infrastructure. The reality is that they're going to be royalty deals dependent on production of coal. So from that perspective, though there are small amounts, I think it was $50,000 a year that was required for the last one. That will also come back to them once they start producing on the royalty, depending on, it ranged from about $3 to $5, wasn't it? A ton, I think, was what the landowner was going to get. So this is at $300 a ton. This is inconsequential. It won't make any difference. And I mean, again, if I talk about the CEO on this one, the CEO has openly said, I want to be like Warrior Met Coal, I think it is.
Yeah.
And they're worth $1.3 billion. And we're currently worth 110 million, I think it is. So that's basically one of the reasons why we chose Ben's Creek. I mean, there are many other reasons.
Yeah, the ambitions of Adam are literally, as you say, he's openly said it on the last podcast that he wants to move Ben to becoming $1 billion company, which he does believe he can achieve, as you say, increasing these the resources with contiguous properties. And these properties, the last property he did with his $50,000 royalties, annual royalties, are literally contiguous to the current property that they are actually mining from. So, it's a no-brainer. It's probably been the best performer on AIM in the last sort of six to 8 weeks, really, in terms of from IPO. And I mean, you could argue it was underpriced at the time it IPO'd, probably was. Even the value now at 30 pence, I think it's sitting around the 30p mark, with a market cap of 110 million, is still got, if you're moving into the $1 billion company, you can see, how much upside there is.
Adam spoke about, adding 2 more Ben's Creeks to what is already there. I mean, the beauty of what we've got very good infrastructure. I think the previous company that was there, they spent something like 60 million, and we got that, we got that all in for $2 a ton. I mean, it's the deal that what he's pulled off is incredible, really. And he's also mentioned that the new lease agreement that he's got is very, very high in coal content as well. So definitely growing the bookable reserves is definitely the next step. And, just second high wall miner for me, once that's churning out the coal, I think it's all systems go, especially to, grow the market cap. So, looking forward to the next sort of 4 to 6 months.
When we first talked to him, he was talking about producing 1 million tons of coal a year, and 2 high wall miners basically just about tips that on an
I don't think we're
basis.
going to be too far away from that by end of Q2. Definitely achievable.
Yeah. And if you do the EBITDA on $1 million and $300 coal, the numbers are vast, So
while we're on the subject of coal, why don't we move on to Contango Holdings, who are in a similar, obviously it's Zimbabwe, different jurisdiction, but let's talk about Contango Holdings, fully funded or funded for production at the Zimbabwe Lubu project, coking coal or coking batteries. What do you think of that one, Grant, as well? I mean, that's something that we talked about. Did you like that? Do you think that there's a real potential here as well?
Contango was a natural transition from Ben for me. Once I realised just how much met coal had moved up in price, I was looking at different options, and Contango was certainly at the top for me. they have huge assets. I mean, it could run for centuries on how much they've got. They've got the mine preparation starting. It's already started. We've seen the videos. So hopefully the production should be starting late Q1, early Q2 of this year. And first revenue should be around 12 million EBITDA. So he said as soon as that's finalised, they will start getting the modular coke batteries in as well, which should start early Q2. So hopefully that's completed by the end of Q4 of this year, which should produce another 10 million.
Yeah, and as you say, I think the size of this resource is massive. It's vast, like literally 2 billion, could be up to 2 billion tons of coking coal.
Well, they've said 700 million is definitely there with 300 thermal coal, 300 million. But they seem to think it's double, which is, that is huge just on its own. That's massive.
And it's not a one-trick pony, because obviously you say you've got the gold projects or prospects in Mali as well. You've got two gold prospects which could potentially contain up to between 1.5 million and 2 million ounces as well. So there's a little bit more. It's not just that coking coal play. You've got gold assets.
Well, Garalo's already proven at 550,000 ounces. They're estimating just over 2 million. So obviously the drill is starting, I think, the middle of this month. So that will open up more options once they get them results back, and they can see where they want to go from there, whether they want to work on the mine themselves or on a royalty basis. I'm sure Carl Espray, who's the CEO, will let us know in due course once they get the results back on that.
Yeah, this one's going to be a bit like Extract in terms of a free hit, because I see that the coal assets, and effectively what they've said is if they dig all the coal up, they have to sell it to the Chinese at a pretty low price. So that's one of the reasons why they're going down the road of turning it into coking coal rather than, so in other words, doing the process to turn it into the stuff that is required to go with the iron ore rather than just the coal itself. Which is what Ben's Creek's doing. So effectively, by changing it into the coking coal, now you're talking $600 to $700 a ton. And that process takes a time and is worthwhile. But why I'm comparing it in a way to Extract is that Extract is going to have revenues that will cover the exploration of the other bit, if you like. And that's what I see with Contango, is that you're going to have this coal that's producing EBITDA and then significantly more EBITDA. And at the same time, you've got the free hit exploration of the gold the down the bottom as well. So it is quite an exciting play, I think. It's they've started with the smaller modular just to get that up as quick as they can. They are starting the installation of the large coke batteries Q4 2022. And they expect that will be finished sort of latter part of 2023. Once they get that producing, the revenue increase will be huge. I think it's something like an extra 45 million per annum. So they've definitely got a plan in place. I think the gold's a little bit more complicated, but once they've got their drilling results back, then they can decide what they want to do. But with the market cap so low, I think it's something like 22 million, is it, at the moment? 550k already proven up. And if they can prove up the 2.1 million ounces, I mean, that on its own is fantastic. So definitely another undervalued stock at the moment, as I see it. Yeah, as you say, it's 23 million now. If by the end of this year it has EBITDA of 12 million, that seems, annualized EBITDA 12 million, then that seems a bit of a no-brainer. And as you said, by the end of 2023, okay, it's 2 years away, but you're talking about EBITDA per annum, twice what the market cap is today.
Yeah, I've got total revenue down. There's a guy on Twitter, a path not taken. It's well worth a look at his slides. But he's got total revenue at something like $67 million per annum EBITDA. So we will see. It's good to see that they are moving in the right direction, because they did have a few fail starts, but they've changed tactics as such. But the price action, share price action, it's definitely moving upwards now. It's had a little bit of a retrace over the last couple of days, but you can see that it is now moving forward. I think by the end of Q1, hopefully, we could be, between 12 to 16p on that one. So near-term returns. So looking forward to the next quarter.
So moving on, let's talk African Pioneer. It's another Colin Bird playing Botswana this time. Well, there's three different assets. You've got Botswana, Namibia, and Zambia. So we'll talk a little bit initially about the Botswana assets, the Kalahari Copper Belt. Basically, there's 8 assets there across the Kalahari Copper Belt. Where let's be clear here. So Sandfire Resources are a very large Australian listed miner producer, and they also recently, I think about 2-3 months ago, acquired a very, very large copper mine in Spain for 1.6 billion Australian dollars. This is a very, very large mining company, obviously, to be able to acquire a copper mine for that value. And they own 15% of African Pioneer. Now, African Pioneer are listed in July of last year on the main market at about, the IPO at about 3.5 pence. And at the time that we chose the stock, they were around the 2 pence mark. So they were trading at about 45% under the IPO price, well under the radar, very much an unloved stock. And that's the sort of thing we like. There's not much, there's not a lot priced in really. They were in a cash position of like 2.2 million, market cap of 4 million. I mean, literally there's nothing there priced in. There's no discovery value at all. So that was one of the reasons we saw it. And then Sandfire, as I say, owned 15% of the company from the IPO days. And they they had an option agreement on 4 out of those 8 Kalahari copper licenses in Botswana. So that where they're actually already mining, and there's potential that these assets are contiguous with Sandfire's assets as well along the Kalahari Copper Belt. So that was one of the big news items, which again the market largely missed. And then there was also the license application in Namibia, which was recently announced. So Andy, I know you're relative newcomer to this. Do you want to add anything on that maybe I've missed?
Yeah, probably what I would say is, it was one which was of interest to me, obviously, because it's copper and Colin's involved in it. I was already invested in Galileo Resources, where there was a similar arrangement with their Botswana licenses, and a buyout of a number of those licenses from Sandfire, a number of licenses which Galileo will continue to explore. And if they're successful, then they'll get a bonus payment for what they achieve. So what it said to me is there is an awful lot of genuine interest from Sandfire, who are trying to really capitalise on the Kalahari Copper Belt. Second thing I would probably say is the RNS in December for the Namibia assets. I forget the name of the asset, but that had a significant uplift in the proven in the resource indicated in that asset, and that was really not recognised by the market. And as you say, at the time of doing your review of African Pioneer, it was round about 2 pence on Gombo.
On Gombo, that's the one. Yeah. There was also talk of cobalt assets, because DR Congo is very much associated, as you know, with cobalt plays, and you see all these horrific stories of you see it on there, the human side or the ethical side of mining for cobalt is pretty grim. Like literally, there's kids going down mines in the DR Congo for like earning $1 a day, and they're being it beggars belief that this can happen in this day and age. But actually, I think it's the Zambian asset, Kev.
It's the Zambian asset that is effectively on the border of the Congo, and effectively there's cobalt there, basically, I think, from what we can gather, though none of that has been investigated as yet. But it seems very likely that it's contiguous with what's on the other side of the border, which is what they're basically mining.
You're right, Andy. That there was, I think it was a resource upgrade, wasn't there, in December on Gombo, where it increased to something like 3.6 million tons or something along those lines, and that was pretty much largely missed by the market. And it's interesting that like when you look at Colin's portfolio of companies, there's a lot of similarity. It's like he started with one large company, and he's just gone, that deserves a spin-off to Galileo, that deserves a spin-off to AFP, that deserves a spin-off to Bezant. Do you know what I mean? And he's got this because he's built such a good relationship with these companies like First Quantum, with Sandfire, etc., and all these companies that we've heard about that are working with each other, you get to the point where you think it's a masterstroke in the way he's kind of spun out all these different assets that he's gained over the years. And it is only a matter of time. You know, Sandfire, as you say, are involved with Galileo. They're involved with African Pioneer. You know, it's sort of like adding two and two together, and you know, the result's interesting, I think.
Yeah, and Galileo was one that nearly made it into R12 as well. I mean, it was very close, because effectively Galileo has more than its market cap as cash or cash equivalent assets.
Yeah,
you know, I think it's
Sandfire. That's right.
I think it's 13 million pounds of cash equivalent assets, and the market cap is 10 million. So you do the maths, and that's without this new deal that's just been announced, which is cracking deal for copper. Like it's an incredible deal, and the market's just gone, oh, that's not very interesting. Yeah, and done nothing about it. It's like Galileo. I mean, I think in a normal market with liquidity, Galileo would have gone up 50%.
Yeah,
you know, because that would have just about counted for the cash. And there's some possibility that this deal that was done was going to add some value. So, yeah, that one was a mystery.
So we talked about Conroy with Fortune 500 company Demir Export, who are Turkey's pretty much largest company on the markets and also Turkey's largest gold producer. When you look at Sandfire, who, as I mentioned to you, they bought this asset, and it's called the Matsa Copper Mining Complex, and they bought it for $1.86 billion US dollars, right? And they own 15% of that AFP, who have got a market cap of 4 million. At what point, again, does the market, and maybe this is a question for Mike as well, you know, what point does the market wake up to the fact that they're working with companies who have got the money to go, there's $1.86 billion for your asset there. Do you know what I mean? For this copper asset. And it just beggars belief sometimes that a company that's valued for 4.3 million pounds, or on the main market, who's got a partner who's 15% invested in it, this large, you know, mid-tier mining company who can afford to buy a Spanish copper asset for $1.86 billion. When is the market going to wake up and go, there's a lot of interest here? You know what I mean? Why would they want part of this?
Yeah, I mean, that goes back, studying that goes back a long time. I mean, we've had, myself and investment partners and other fund managers have had that conversation between ourselves, between other market professionals, and between the companies themselves. And traditionally, the quick answer you get is whether they have a stake or not. The way the M&A works within the big miners is it doesn't, right? So sometimes some guy will be given $500 million to invest in various companies around the world. It doesn't happen that much anymore, but it used to. And take stakes. And even in those circumstances, the policy was implicit, if not explicit. You don't go for 100% until they prove themselves. We're happy to buy it at $1 billion, where, you know, we're not happy to buy it at 50 million. So I guess it's a non-answer. They actually sew into the fabric an irrational investment policy. But it's common. BHP, Rio, they all operate like that. They just, and frankly, it goes past mining. You see it in other industries as well. They may take a stake. They may do a JV, a private investment. They may buy a piece of the company, but M&A doesn't happen until the company's the market has valued it at several hundred million or higher. The rest of it I can't answer. You know, I have a similar situation in Atlantic Lithium. Piedmont have a stake. Piedmont, biggest lithium producer in the world, struggling in their home market, and it just can't work out why they wouldn't buy the rest. So I know the answer, and I keep asking myself.
So I think basically what you said, and again, apologies if I got the wrong gist of it, is it almost needs the market cap to raise of the said company to to an institutional level of, say, 200 million pound company before the major would then make that swoop and go, we want you. Okay. Understood. Now, I understand that. And it makes perfect sense to me, that.
Yeah. And what is worth looking, if you want to know more about what's been going on in the copper area with regards to M&A, take a look at the RFC Ambrian Copper Projects Review for 2021. And that's kind of a retrospective look at what's happened over the previous year compared to the years prior to that. And for 2020, it was just 6.2 billion of deals that took place in relation to mergers and acquisitions for copper assets or copper companies, versus 7.5 billion in 2020. And you can see the charts looking back to as far as 2016, where it was as high as 16 billion. So there has definitely been a decrease in the M&A activity. But at some stage, there has to be a wakening up that copper is needed.
I think that's great.
And we can also bring Carus Minerals into this conversation and Bazant, if you like, in terms of the copper they've got on Cyprus. And joint ventures already been done with Bazant for Carus Minerals. Jubilee Metals is looking like it's going to happen to clean up all the different things that are on Cyprus. For the literally, I don't even want to put numbers around it, but there's a lot of tonnage of copper on Cyprus in these different places. You're talking about truly as a deposit, and possibly a 1.5 kilometer strike deposit as well as the open pit that's already there. You've got gold, you've got copper, and that's without Calabasas, which is bigger again. Used to have 14 mines in there, and I mean, you're looking at the enterprise value of that now at its market cap of something ridiculous like 5-6 million pounds, when potentially by the end of 2022 they're going to have a plant on there either producing copper or about to produce copper and gold. So within 12 months the EBITDA from CMRS should be the market cap at least, and that isn't exaggerating. So how can you have an EBITDA of 1 times market cap? Is this normal for a miner? It's not normal even for a miner. No. So you've got to be talking 4, 5, 6. Yeah. And another reason why we chose CMRS was for that very reason. By the end of 2022, there should be a mine or a processing plant on Truly. Or if it's not, it's going to be very close. And by the end of 2023, you should have some sort of processing facility on Calabasas and all the dumps and the tips and the 14 different mines that were there. So you're going to have EBITDA of maybe 3 times current market cap in 2 years. Is the potential there? Jubilee, getting very excited by the fact that the copper grades are percentages, not part of 1%. Copper grades have been announced of 12%, because of the way the dumps have concentrated the copper. It's crazy, Now, we haven't had the assay results there just to absolutely confirm them. That's the problem. And that's maybe why people have just walked away, because of all of these delays of assay results. But at the end of the day, during 2022, and probably the first quarter of 2022, that's going to get sorted. So again, it's just how is that valued so low? Because we did start this conversation and I think it was Mike who said it, there are so many cheap miners.
Is there a danger though, guys, that with the UK market and not necessarily FTSE, because FTSE is at sort of let's say an acceptable level with the current status of the economy, and it could easily bounce up to the 8,000 mark within the next few months, which wouldn't surprise me. But yet all the nano caps and all these AIM casino stocks have been, the high risk reward stuff that we are talking about has been really left behind while the FTSE's kind of recovered and done well. Is there a danger that some of these companies that are new or thinking about listing in the obviously UK entities will think about maybe not going on to the AIM market? And obviously we know about the main market rules have changed. It's going to become very difficult to list a company on the main market because they need to start with a valuation of 50 million or whatever the new rules. Do you think there's a danger that companies will not want to list on Aquis and AIM and want to go onto the Frankfurt Exchange or the OTC pink sheets or whatever? I don't know. Maybe do you think there's a danger that the value of a company is not being discovered in the UK anymore and they want to look elsewhere?
Oh, okay. Yes, is the answer. Brexit, by the way, I'm probably the only Remainer on this call, but Brexit isn't helping. The first stop for so many Australian Canadian entrepreneurs, even over their domestic markets, has been London in the past. So we had a positive selection bias as well. We were getting better companies. The belief that London was a bigger market, generally AIM's reputation was probably undeserved, 3-5 years ago, but it had it because it's associated with the LSE. And you're damn right. Canada, Australia especially will benefit. These guys are going to stay home. And there's a real risk that AIM shrivels and dies generally. Yeah, a lot of people talking about that.
Yeah.
I talked to a couple guys who are huge fans of Aquis, but mostly because whatever the opposite of a fan is, they're the opposite of a fan of AIM. So they think Aquis has to succeed because something has to replace AIM.
The real contrarian type attitude.
Right. So far, they're not right. They're the opposite of right. But,
Yeah, but I think Aquis has got a good chance. But the problem with Aquis, I suppose, at the minute is just its viability in terms of people wanting to invest. You've got all the brokers like dragging their feet about doing proper electronic trading and stuff like this.
Cloudbreak Discovery listed on the main market earlier in 2021, sort of, Q2, end of Q2, Q3. Cloudbreak's been successfully executing its business model with 13 out of 17 assets now optioned to partners. So they benefit in three ways. They've got cash payments now, they have share payments now from JV partners, and then future royalty payments from production of the resources and assets. So over 16 projects, mainly in North America and Africa. What do you think on this? Do you think the market really gets these cash generator, these royalty generator project companies at all?
No, they get them even less than the individual miners, I think. The fact is that they don't understand the potential value that is already in there, I think. I think, again, it's another one of the, if I compare it to seed, just in terms of NAV, I think in all honesty, it's probably the same, 50% or less of the NAV is currently taken account of. We've had discussions with them. There's all sorts of things that could happen. They've mentioned it. There's potential for a spin-off from some of the assets, which I think effectively would generate a new company. So you would get a new share. And I think that's very likely. And I think that's one of the things they want to do every year or every other year, that they're able to spin something off. So maybe you'll own 2 or 3 different shares for owning Cloudbreak down the line. And I think in the future, this is going to be a dividend payer. I mean, of this, there is no doubt in my mind that they're going to have income much greater than they require, and they will start to give dividends. Now, maybe that's 2 years away, maybe longer, but I think currently it's priced at 1.8 pence. Which is laughable, really, in terms of the thing. I think we've got our target of 5.5p on it. I think 5.5p, 6p, and I think it should do that easily based on just the valuations and the different things that it's working on. Lots of lithium plays in there, copper plays, gold plays. Basically a whole combination. If you want to not research all your miners and just take on board that these guys can do deals and get miners, and buy Cloudbreak, because you don't have to do anything else. You just buy it, sit there, wait for them to do all the work, and you should get a very handsome return going on.
Yeah,
And
it's definitely one of those patients.
Kyler has made his own wealth doing this process, you know. So the scenario is he's now turning this over to the market, and he's not doing it for fun. He's doing it because he wants to create wealth himself. And he's already, I think, is 21% shareholder of this. So there's a lot of skin in the game. Yeah. And he wants to make it work.
He wants to deliver value for shareholders. He's confident he can reciprocate what he did when he was doing this as a private entity. And for me, as you say, it's a long-term burn in there. Get it tucked away. And just watch it all unfold, because these guys have got so many assets and projects, 17 projects that are ongoing, that, you know, you realize that even 4 or 5 of them to become decent world-class revenue generating projects, or even 2 of them, that would transform the company overnight.
You'd be talking 4 or 5 times the market cap, I think, if even probably 2 or 3 of them do anything, you know, so... and potentially with the royalties, and the royalties being valued at probably 8 to 10 times the royalty payment, you know, you're then talking about huge amounts of value being added as and when they happen. Now, they're not going to happen straight away, but they're going to happen in time. So, yeah.
So we'll turn away from a future revenue generator to an actual revenue generating company now, and that's Mast Energy Development. So this is something that's quite up your street, to a certain extent gas peaking, but basically energy reserves, power reserves.
Yeah, I mean, it's gas peaking, basically. I mean, they're basically going to have gas peaking in 3 different places at the minute in the UK. All 3 operational, paid for, done. And by the end of Q1, they'll have £1 million EBITDA coming in, annualized. Currently market price, I think, is 8p, which is, I don't know, I think it's about 13 or 14 million pounds. I think it could be a bit less market cap. The goal is to have the potential to have 70 megawatts. They've currently got 20 megawatts at the minute, to have 70 megawatts by the end of 2022. We're going to be visiting some of the sites this year as well to see what's happening. The sites actually can be escalated up to around 50 megawatts, I think, with additional plants on those things. We all know there's a huge problem with the electricity, and the fact that we're going to go to green energy and have to depend on wind and solar and all the other different things, waves even, then basically there has to be a balancing system. And this is what these gas peakers are for, so the electricity system can be balanced. Now, because there's not enough of them, the price is skyrocketed for how much people can actually pay. And not only that, they're having to switch on coal-fired power stations at a huge cost, because they've got to balance the grid. So there's a massive need for this. They want 300 megawatts over the next few years. And if they get that, they're going to have, at a price of 5,000 per megawatt, you're going to have somewhere in the region of, I think it's 15 million pounds EBITDA per annum.
Yeah.
And that's the very bottom line, because effectively they've changed the rules in thousands of hours that are allowed, from 1,500 hours to 4,000 for each gas peaking unit. So I think that's per month. I don't know. You have to do a bit more research on that, but from memory, that's the situation. So that's the absolute bottom line. If they get to this figure of 15, and basically it's a utility stock, then you've got to be talking about a PE of 10 to 15 to even 20, because it's regular income, and 15 million pounds times 20 is 300 million market cap. So this is one of the safest plays we've picked, okay? So if you want a really safe play that you think has upside potential, the broker note on it is 30 pence. It's 8p or 8.5p at the minute. Then this really is a no-brainer. This is like, put your money in there, forget about it, and in a few years' time, you should be many multiples of this, based on the fact that they're going to just continue to regurgitate the profits into making more of these sites.
Yeah, I mean, they're currently assessing 71 megawatts. but they've got an aim. They always had it's a bit. I like to have an aim, a target that a company wants to achieve. Like anything, it's always good to have a goal, isn't it? Like Ben have got a goal for 1 million, tons of coal, etc. The target that Mast have set is 300 megawatt, and they're kind of around about the 80. Is it between 11 and 12 at the moment that actually are currently generating at the moment, that are actually in production?
Yeah, by the end of the first quarter, they will have 20 megawatts in production. Now, yes, you're probably right. It's maybe 11 or 12.
11 or 12
but
currently.
They're all, by the end of the first quarter, 20 megawatts. This will produce £1 million of EBITDA.
So just so people understand, the demand on the grid in the UK obviously is getting greater, and there are this potential for blackouts and troughs, literally blackouts where the grid cannot cope with the demand for the energy, for the electricity. And the other figure is like, you look at like the demand for charging EV vehicles. I think that it stands around about 1.2% of the cars in the UK, it may even be less than 1%, are EV. EV powered vehicles actually make up that number. And they're talking about driving it towards 5% over the next 2 or 3 years, and then 10% in 10 years. So if everybody, or if it changed overnight and we doubled the amount of electric vehicles from this point forward, and everybody was plugging into the grid and charging, do you think that's good? I mean, the demand as it increases as the demand for electricity increases, especially with EV vehicles, it's going to be a drain on there. So really, the requirement for power
the system couldn't cope.
No,
the system has to be built out, obviously, and the system just could not cope.
So basically, reserve power is really now at an all-time high in terms of demand.
Yeah, it's not there. That the suppliers who need it, like the electricity companies, it's not there. They don't have it.
And they're also paying some record amounts, right, for that reserve power to take that on board and put it into the grid, right?
Yeah, they're doing that, and they're also initiating with 24 hours notice coal power stations to actually start up so that they've got themselves covered. So how is that environmentally friendly? The gas peaking is much more environmentally friendly because you're only basically expending the energy that you require for a short period of time.
Yeah.
And the other scenario
there's also a battery element as well involved to a certain extent. Reserve.
Yeah, that's what I was going to say, that some of the sites that they've got have the potential to also put the batteries on there as well. Yeah. So then the gas peakers could be working for more hours, effectively filling the batteries so that the batteries can then just discharge. So if you think about it, if you set your gas peaker to work between 2 o'clock in the morning and 6 o'clock in the morning, the gas is dirt cheap because nobody's using it. And you fill your battery, and then you expend your battery between 4 o'clock in the afternoon and 8 o'clock at night, when the cost of electricity is at its peak. You have made a fortune, in the differential between being able to use the gas when it's very cheap to expand the energy when it's very expensive. So there is method in the madness in what they're doing here. Mast, big deal. And ultimately, you could also argue Kibu as well. Kibu owns 50% of Mast, and actually Kibu's worth less than the portion of Mast that they own, which is another bizarre scenario. But anyway, we won't go there right now.
Final stock, 12 stocks for 2022, featured in the 12 stocks of the 12 days of Christmas that went out, obviously, on those 12 days. Very well received, enjoyed recording them. If it was not a labor of love actually editing them, as you can imagine, how much effort went into that.
Yes, so I would like to publicly thank Phil at this moment, because he did 10 times more work than I did because he had to edit them. I only just had to sit here and talk and try and organize and get CEOs organized and try and make sure they were here and all the rest of it. But Phil edited them, so thank you very much for all your time and effort.
Appreciate it.
And you did a great job.
Thank you. So, so moving on, last stock of them, and actually, very, very current, because obviously Hydrogen Utopia International, HUI, listed today, IPO'd onto the Aquis growth market, and they literally went live this week. Yeah, I mean, 7.5p was the IPO, was the placing price, raised 3 million. Certainly, the first thing is they did well on the first few days of trading. They've moved up probably 80 to 100%. Very, very good finish to the week. So, and hopefully, there's plenty more news flow to come on that one. So, if anyone doesn't know, HUI are effectively a distribution partner or a licensee to Powerhouse Energy's DMG unit, which is, if anybody doesn't know, I mean, most people know Powerhouse Energy, but basically it's used in the conversion of plastic to hydrogen, or plastic waste to hydrogen. It doesn't just necessarily mean plastic. It could be tires or other waste products within that kind of group, into the production of hydrogen or syngas, electricity, heat. There's many different byproducts that come out of this DMG unit. So they are literally licensed to sell this product within Europe and the rest of the world. And basically, there's been many deals that have come through since the inception of the company about 15 months ago. There was a Linde framework agreement. Now, Linde are one of the biggest German companies in that space. I think there's something like 80 billion euro market cap. It fluctuates between 80 and 100 billion market cap. And they don't choose partners lightly. So there's been some amazing news pieces that have come out. They've also got the Konin plant in Poland, which is currently under EIS, going through the environmental studies. And it certainly looks like it's hit the ground running. It certainly looks like a good IPO, right, Kev?
Ultimately, I really like this company, and this company really could change the face of the world in terms of plastic and the ability to create hydrogen in a clean way while cleaning up a big mess. Because at the end of the day, plastic is increasing in usage, not decreasing. Even though in a lot of the Western world, people are saying, oh, I'm not using this plastic, I'm not using that plastic. The reality is that 7.5, 8 billion people on this planet are using more plastic every year, and it's not going away. Yeah, from a roast perspective, today it hit 15p. A few people bought at 15p today. So we can, not today. On Thursday, people paid 15p for this share from 7.5p. So we'll class that as our first bag in 12 shares of Christmas. But I think it's got plenty to go. Plenty to go, because the potential here is vast. It's not going to come straight away, so you're buying potential. But just like PHE, still haven't got that first unit. I believe wholeheartedly that HUI will probably be the first ones to have the first unit working and operational in Konin in Poland. And, they're going to have a queue or a list of probably well in excess of 25 units to go at that time, because they're already in place really with letters of intention and so on and so forth.
Yeah. I think the game changer in this aspect, and we talked about this week with Alexandra, is it's all about the FOAK, the first of a kind, and meaning that they'll hopefully the plant at Konin with these 10 DMG unit will be the first of a kind, the first commercial DMG user or production facility would be a much more apt terminology to use, in conjunction with Linde. And the other thing that a lot of maybe investors don't understand is that with this framework agreement with Linde, they obviously are working on these chemical conversion chambers and or with in conjunction with Electron and the syngases. They're the masters of this technology. They have actually got the first refusal, is the terminology. They've got the first refusal on each one of these projects that are going forward with HUI, so they can turn around and say, we don't want it, we're not interested, maybe the fees are not right, that they can look at each and scrutinize every single project and then walk away from it. But from all intents and purposes, from what I gather from talking to Alexandra this week, the fact that Harold Ranker, the CEO of Linde, went and attended COP26 and actually signed this framework agreement in front of the press, and they really don't do fanfare, this company, because they're already a very much a multinational, multi-billion-dollar corporation. wow, the fact that they actually went there with this junior company. And the beauty of Alexandra is she's just so driven, isn't she? The passion you hear behind her. I mean, have you ever heard a CEO? I mean, Adam's. We've talked about Adam from Ben, but same passion, probably more so. But you just kind of like, you get the feeling they're so driven that they're not. Failure is not an option.
Yeah, no, she's driven. And in a different way, Howard, who's advising her through PHE, is also very driven.
For me, really is one to watch. All of them are on our list, but for me, we're ending on one that has really, hit the ground running in 2022. It's easy to just label everyone and go 10 bag, which is not what it's about. We've been conservative. Some people will probably complain and go, oh, Love Hemp, you've only set 4p price target on there. But it's currently at 1.2. So, obviously there are legacy holders that will be holding some stocks that are going, oh, well, I'll only be break even at that price. But that's not the point of them. That this is to a certain extent. Yeah, obviously we want to reward current holders, but we also want this to be aimed at new investors as well, to say, well, I got in at the 1 mark or 1.2 and it has hit the 4. Now, do you sell that? That's a target price. And this is a really good one. It's not just the buying of a stock that's difficult. In fact, the buying is the easy part if you time it well. You've got to time your buy right. We all know that. But selling is knowing when. Do you slice? Do you sell the whole position? And then a lot of people, we hear them say all the time, well, I should have sold. I'm regret not selling. I should have traded. And so the target price is probably when if it hits that, and at the end of the year, it's not, it's half that, at least we can say at the end of the year, it hit the target price. That's what we aim for, and we'll be reviewing that. We'll do an update list and tick them off and say target hit, because that's what it's about, right?
Yeah. On a quarterly basis, we're going to review these. So we're not putting the list out and then just forgetting about it. So every quarter. And there was 3. I mean, the last thing I'll say, there was 3 stocks that were very close and nearly made it. But we had to decide, and that was Mila Resources, Galileo Resources, and Bidstack. They were the 3 that nearly made it. And the reality is Bidstack's already doing quite well. Mila's had good results, but the share price hasn't gone. And who knows about Galileo? I have no idea why it hasn't gone up. But anyway, that's just another story. So we could have chosen a huge plethora of stocks. There was many, many on our list when we started. But we really decided that we wanted a mixture and we wanted revenue to be a big part of what we were talking about. And also, just upside potential in terms of things, catalysts that were going to happen in 2022 and beyond. And it's been great fun. It has been great fun to do the 12 stocks for Christmas. It's taken a long time. Again, I thank Phil for all the stuff he did. And that's over and out.
So on that note, thanks very much for your time, gentlemen. And we look forward to hearing from you again and inviting you back on for some, really good, decent debate and chat.
Thanks, Phil. Thanks, Kevin. Well done on the 12 stocks of Christmas as well, because I know just how much time that can consume. So thank you. I think it brings a lot of information to investors and it helps a lot. So thank you.
It does.
Appreciate it.
Thank you. Appreciate it. And you can thank us for the 12 stocks in December this year if they've been successful.
Well, exactly. We're putting the neck on the line. I mean,
it's
we've got the 12 stocks there. We've got the target price. We're going to put out PDF, which we'll be probably doing the rounds. What we'll do is we'll put the PDF link in this link to this podcast so people can open it up, have a look at it. There's a description of each one of the stocks. There's the price when we recorded the podcast, because a lot of people will probably come, well, the current price isn't what it is now, because some have moved on, as Kev mentioned at the beginning. I think Chill, when we first recorded it with Mike, it was around the 13.5, 14p, as you rightly said, and it's obviously hit the 9. So what we'll do is the price that is on the current price marking is the price when we recorded the podcast. And then obviously the target price is it's self-explanatory what that is. But please don't get on and go, well, it isn't current price. I can't buy that now. Well, that's not the idea of this. This is when we tip this and when we recorded the stock. So I think we've got the mic spike away there as well. So happy days.
Thanks, guys.
Cheers.
Thanks for your time, guys. It's much appreciated.
Cheers, guys.
Cheers for that. It was great to have the guys on board. It was a really nice format, relaxed. I think they enjoyed it as well. It was good to hear from other investors. We're going to try and do that a bit more probably often in this season of the roast, is to try and get on some investors who are passionate about stocks. So if you really want to come on board, please DM us, send us an email at the admin@sundayroast.net, which is at the end of the podcast. And we're really glad to have you and entertain you for an hour or two on a Sunday. So yeah, please do get in touch. And it's been great doing this. I think this is a good start to the season. Is a wrap up of the stocks we picked.
Yep, great, good job. Thank you, Phil.
Yes.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.